The summer is different in the markets historically, fundamentally, statistically, and we're going to dig into it, give you the reason why, but also go through some statistics, and we're just going to give you an idea of how to trade in the summertime. So make sure to stick to the end, because that is where you're going to get the best advice on how to trade this summertime. So welcome in, much love, Trav here. If this is your first time joining me, my name is Travis, and I design top-down fundamental trading systems and turn them into computer back-tested strategies that perform awesome. And I'm going to tell you about the summertime. So you might have heard sell in May and go away. Is there truth to that? So let's start with the data, and then we're going to get into the reason why, and then we're going to get into how to trade it. So we'll look at the S&P 500. The S&P 500, oh, by the way, when I'm recording this, it's the first day of summer, so it's very topical. By the time you're seeing it, it's summer for you. But I'm on my way back from a summer solstice guided hike. One of the things I do outside of trading is I'm a private adventure guide and do guided hikes, and we did a really cool event for the solstice out here on Oahu, on Hawaii. Anyways, let's look at the S&P 500. On average, a historical return is about 8% a year. 7% of the gains are from October to April. 1% is from May, June, July, August, September. So the 7 months outside of the 5 summer months is responsible for 80% of the returns more, right? Most of the returns. So again, it's not that the market goes down in the summer necessarily, but it generally averages more sideways. So 8% annual return a year on the S&P 500, going back about 100 years. 7% through October, November, December, January, February, March, April. And then May, June, July, August, September, 1%. Okay? This is also true of crypto, by the way. Crypto only has 10 years, really. A little bit more, but basically 10 years. So there's not as much data there, but we see a similar thing there. So we can look at the biggest gaining months and also the months that have the most all-time highs. The biggest gaining month is usually December, and January, October, December, April. December definitely. On average, it's not always, right? So for crypto, it's only a 10-year sample, but the best months have an 80% hit rate. But the worst months might have a 30%, right? With the S&P, it's not as extreme. It's maybe you win 70% of your trade. Sorry, you don't win 70% of your trades, but if you're just long, at the end of the month, you're up 70% of the time, right? So we also have all-time highs. It's not so extreme. It's something like, okay, there's 12 months, right? So on average, divide 100 by 12, you get 8. So the summer months, each of the summer months is maybe like 5% of the all-time highs happen. So they're underrepresented, but there's still chances of all-time highs in the summers. But a more greater percentage, say 10% of all-time highs are happening in December, January. April, for whatever reason, is pretty good. So part of the reason why is we're going to get into the fundamentals, but the volume in the market drops off as well. So it's not so extreme, but there's maybe 10% less trading volume in the summer months compared to the other months, which is kind of a lot, because really you want a lot of volume, you want a lot of mania and frenzy and a lot of activity and money coming in to move price in a strong trend. So the less volume means you're going to get fewer all-time highs, fewer strong trends, and also that means less liquidity. So the trading conditions might be slightly worse. I don't have data on that, but if there's 10% less trades, then in theory, you may have wider spreads, commissions, stuff like that, just more adverse conditions. So that's the key data here, is that most of the, okay, one more thing is, what's the percent gain by month? I forget what December is, but it's multiple percent. And September is actually historically negative. Over 100 years, it averages negative. So not only is June, July, August, September, May not great months, of all those, September is on average negative, down, negative 1%, like significant. Not just significant decline-ish, I mean 1%, but significant sample size, historically significant. Why? So for me, it's not enough to know that something's happening. I want to know why it's happening. That gives me more conviction and confidence. So, and for you, okay, I told you data, but why? So the first one is just out of psychological and seasonal pattern, that people know this pattern exists and they play into it, where it's like, all right, if I'm going to sell in May and go away, there's literally a saying that almost every trader's heard of, the market's at a high place in May, I'm going to sell, I'm going to come back in October, late September, take the summer off, right? So part of it is just it's a historical, it's like a circle, a cycle, self-fulfilling prophecy, right? But there's more. So what else? Well, this is the actual fundamental, and it's basically vacation. A lot of people take vacation in the summers, especially wealthy traders can afford to take a lot of time off. So if you're managing a hedge fund and you're up huge on the year, you're going to stop your trading activities, and you might hedge by reducing your exposure beforehand. You might sell in May. I mean, think about it. You worked all winter, you worked all spring, it's summer, you're a wealthy person, say you live in New York, you want a summer in Italy, you want a summer in Greece, you want to go to the Hamptons, you want to go somewhere beautiful. So there's a lot of vacationing that's happening in the summertime that takes traders away from their desks. And that's what reduces the trading volume, it's what reduces the liquidity, and that's what makes it harder for all-time highs to occur. Okay? Now, related to the trading, or the vacationing, also summer vacation. So if the kids are off, the big traders, they want to spend more time with their kids, or they want to take their kids, and that's when they take the Hawaii trip. That's when they go to the Caribbean or whatever it is. And I'm telling you, I work tourism in Hawaii, and I live here. There's a couple weeks in the winter where the beaches get crowded. It's winter break, but it's really the summer that's the tourist season. The beaches get packed out. So that's why it's like, as an industry, tourism booms in the summer, and trading wanes in the summer. Tourism wanes in the winter, and trading booms in the winter, right? So now let's get into how to trade it. Now it's good to know this, and I'm going to tell you that more experience is going to be really helpful for me, and I'm sure more experience is going to be helpful for you. I've only been in the markets for 5 summers. This is my 5th summer now, and the first summer I was in the market was 2000. After we rallied off the March lows, I'm just going to be talking about the Bitcoin price, not the index, but Bitcoin was at 10,000 for so long. crept up, but it seemed like it traded sideways for 5-6 months. It spurted up to 14, dropped back to 10, 12. It finally started to move in October. So that was the first summer. And then it ripped in the winter time. Started its big move in December, January, February. Topped in April, had a huge decline in May, and was sideways without a bottomed, but didn't move up in May, June, July. I believe the bottom was in July in 2021. In case I'm wrong, maybe the bottom was, well, we peaked in November, so we might have bottomed in July, August, maybe September. It started to move up. October, November, December had our mega rally. And then we dumped. Summer of 2022 was bad. It was consolidation and down. Ripped in the winter, late December 20, and really it was late December 2022 and January 2023 made its move. And then in the summer of 2023, price went pretty sideways for a couple months. Right? If you look at the Bitcoin chart, I believe there was a major dump in August that took the June low, so it was basically sideways from I think May, June, July, August. Started its move up in September, October, and then had a mega rally at the end of the year to start the year into 2024. Now we're in 2024, and what's happened? Well, it's hard to say with the stock market, but the crypto markets topped in March, April, May, depending on the asset, and has been declining since. So I really appreciate having the data and the fundamental reason. And let's talk about the trading plan. So imagine you're the professional trader and you know that trading conditions aren't optimal during the summer. And it's not simple to just short, because it's not like there's huge declines necessarily. It's just sideways price action. And you know that the big money is made through the powerful trends, not through scalping the low time frame ranges. So say I'm the big trader, I'm going to take the summer off mostly. I'm going to lighten my exposure. I might stay exposed a little bit. I'm going to take a couple trips though. I'm going to go to Hawaii. I'm going to go to Greece. I'm going to go to France in the summertime. I'm going to go to Sweden. I'm going to leave things alone. And so what I'm doing is I'm preserving capital, and I'm also preparing and getting mentally fresh for the what's going to happen in the winter. So and I've experienced this, I trade through the whole summer and just burn myself out and lose money, spin my wheels, and then I'm not prepared for the major rallies that come in the winter. Now all the data I've given you is generalized, right? Sometimes there's summer rallies that take you to all-time highs. It's just not as common. It's not as common, and even in the last 4 years, it's been persistent from what I've seen. So what I can say is it's maybe better to not trade in the summers, actually. And you can work on your trading business. This is where you learn how to code, or you do computer back testing. You work on your strategies. Maybe you paper trade to stay connected. You work on another business. If you're trading, teach other people. Have a trading education business. Sell a course. There's nothing wrong with that. That's how you're going to learn and get feedback as well. For me personally, my focus in this summer is on my tourism business, my private guided adventure business, and I will trade if there's signals, but I really want to be fresh come October and I'm ready to catch some bigger moves. And that's maybe what I could recommend to you. I will say as well that we talked about the summers being not good, but the contrast is that the winters, there's vicious rallies. You've probably seen it, right? You've traded through it. 2024, January, crypto markets absolutely ripped. 2023, January, crypto markets absolutely ripped. 2022 was a miss. 2021, crypto markets absolutely ripped. Same with actually 2020, that was before I started trading, but crypto markets were ripping and it happened to dump in March. That's when it topped and then was slow. So, yeah, it's real, and that's the reason why, and I hope that benefits you in your trading. And yeah, let's enjoy the summer and get rich together in the winter. Okay? Appreciate you, much love. Talk to you soon.